Okay, so the first article we're going to talk about is one that released right after the show last week, or we saw it right after the show last week.
They waited.
And I'm going to kind of skim it real fast. It said mortgage applications sink to their lowest level since before the pandemic hit. It goes on to say mortgage demand fell for the second week in a row. Inventory is low. High home prices continue to weigh on the housing market. Mortgage applications decreased 1.8% last week, according to the Mortgage Bankers Association. Seasonally adjusted index fall to the lowest level since the beginning of 2020. Both refinance and purchase applications took a hit. Yada, yada, yada. Fast forward 1 week, and we have weekly mortgage refinances spike 20% after the interest rates drop. And the applications to purchase are also up 8%. So it was still down 29% compared to the same time in 2020. It says homeowners saw an opportunity last week and seized it. A sudden and unexpected drop in mortgage rates sent borrowers to the lenders in droves. And that was mainly talking about the refinance activity. We know that purchase applications aren't as sensitive for refi or for rate decreases, but still the number of purchase applications went up. That is probably more than likely due to the increase in inventory that we talked about last week. If you saw our thumbnail, it was the Oprah Winfrey, you get a house. And we were talking about signs that the inventory is going up. And we said, I think there were several on the show last week that said if inventory goes up, it's only going to start absorbing more for the buyers that can't currently find a home. It's not going to have a huge impact on prices. We might see price increases slow a little bit. And that's pretty much exactly what happened. So the treasury yields have tended lower the past month, and investors remain concerned about the COVID variant slowing economic growth, said Joel Kahn, MBA's Vice President of Economic and Industry Forecasting. Mortgage rates fell for the second consecutive week as a result, with a 30-year fixed rate hitting 3.09%, its lowest level since February 2021. What was that?
That's just Matt is.
Oh, it's Matt. I'm not even looking at the screen, so
I know.
Right. The supply of homes is finally beginning to rise, and that also may be bringing some buyers into the market that are edged out by the heavy competition over the past year. So is the third article in with this one too? Well, a little bit. I would love to cover this too, and then I want to get some feedback. Yeah. U.S. mortgage rates fall further back from the 3% mark. Mortgage rates fell once more the week ending on the 8th of July, following 4 basis point decline from the previous week. 30-year fixed rates dropped 2.9%. So just that's pretty low. If you're falling in the twos in the heat of the summer, which is when most people like to move, this is pretty great for someone that's looking to purchase a home. Plus, you're seeing the increase in inventory. It seems like a perfect storm for buyers and then sellers that need to buy because maybe inventory is loosening up for them to find something.
Yeah. And that's what, so I want to get the feedback here is, we got some good feedback on the pre-show show yesterday. And if you're not a part of it or you didn't catch it yesterday, every Tuesday at some time, we don't really have a scheduled time,
it's
but
usually around 2. Like yesterday was 1:45. It's been 2:15.
Raise time.
Yeah, if you follow us on Clubhouse, then you can get the alert and you'll see when we schedule it. But it's usually we're going to try around 2:00.
Yeah, and Nico, who is in North Jersey, I believe, he works in a few different markets like all of us do, but in one of them, he said it's a full-on buyer's market. So, and he's kind of mentioned that a few times on the show, but now he's like, it's like, he has a current listing that's the lowest on the market and it's just sitting, so that's, crazy. You could list anything, at any price pretty much a few months ago and it would just go. So I think that's interesting. And what we're seeing, I did run my numbers and I think we talked about this last week. So our numbers are up. Slightly, it's 4% or something. So it's tiny, but we're at almost a full month. And I did the same 4 cities that I did last, because I usually only do Rancho Cucamonga, which is where the city I live in. But I added 3 more cities and we're up to almost a full month of supply.
Wow.
So, we've been at like 15 days, 20 days for a while. Now we're at 28. So when you do the math, it rounded up to about 28 days. So we're getting there. So it kind of is in line with the story. But the biggest concern is that we currently have 309 active or coming soon listings. There's 511 in pending or offer, or what we call backup offers, or an offer has been accepted. So there's still a lot more in escrow than is available. So that's still a little bit of concern, because that stuff's all going to be, so things are still going quicker than they're coming on the market, but it seems to be less of a discrepancy as it was before. It's not as stark as it was before.
So I want to take, I'm going to bring up the clubhouse, but I want to have, because we have, let's see, Kelly, Carly, Stephen, William, Jen, Matt, and Andy are all moderators in the chat right now. I'd love to hear your take on your market. So flash your mics, and we'll be bringing you up in just a second. But I wanted to have another take on this inventory that you just talked about. So there's 300 homes that are currently available. There's 500 homes that are basically pending or under contract. So that's 800 homes total. If you do the math, that's about 63% of the market is currently unavailable. So everyone that's searching on Zillow, Trulia, and Realtor.com, you can tell them that, hey, look, I know you're getting frustrated because 6 out of 10 of what you click on, you don't have a hope to purchase. So whenever you can't even buy it. So don't get your hopes up 6 out of 10 times. However, if you want me to filter the market for you and only show you properties that you're interested in and are available, then I won't get your hopes up. So that's another way to battle some of the big third-party websites that don't take that data, and they don't really care to correct the data, because their goal is to generate the lead for the agent. So if they could generate the lead for the agent, then they've won, and that's fine. That's their business model. And I don't, I don't really care. But for the consumer, once they're actually active in their home search, it's important that you help them delineate that. And I still have my clients, if you see anything on Zillow, just send it to me. And I'm happy to take a look at it, make sure it's still available. And sometimes they are, sometimes they aren't. But one of the biggest things I do is, if it is available, I compare that piece, that property, to the search I'm running for them. And then I ask them, hey, you said previously you only wanted 4-bedroom homes. This one's 3-bedroom. Do you want me to change your search criteria and see what else opens up? Yeah. Because, sometimes they'll be talking at night together, and they'll make this decision and be like, yeah, let's tell the real estate agent in the morning. And they forget to tell us.
Or, hey, it's just that one house. No, this house had a den, so we were kind of okay with it. So you leave it at 4. But, and I always say the same thing. I don't mind where you guys look, but make sure either to send it to me or cross-reference it with my search that I have set up for you, because you're not going to see any unavailable properties.
So there you go. So that's one way to do it. Let me bring up Clubhouse. I'd love to hear what's going on in you guys' markets. Are you seeing a little bit of relief in the inventory? Are buyers finding what they're looking for? Carly, I know you're in Northwest Arkansas. What are you guys experiencing there? She may not be. Oh, there she is.
Hey, yeah, I'm starting to see some price reductions actually happening here. So it seems like it's slowing down. However, still getting some multiple offers. So pricing is a little bit tricky these days now, because of wanting to get those multi offers without just pricing yourself out of the market. So it's an interesting balance now more than ever.
Yeah, that's a good point. Let's see, Matt Lamarche, you're in Hotlanta. Are you seeing any of that? We talked to you a little bit last week about it. Have you noticed any change?
Yeah, I mean, what we're seeing is a lot of the same. Honestly, a little bit of cooling, but not what people not in real estate would call cooling. So instead of getting 10 offers, you're getting 3. The prices are still really, really high. In fact, I anecdotally heard a story of a property that got listed at 1.5 and sold at 1.7 within a day. So a lot of the same.
Wow, that's wild. Wild times. Let's see, Jen, you're in Oregon. What's going on in your neck of the woods?
Oh, shoot. Sorry. I wasn't wholly prepared. We are having a little bit of a slowdown. It's actually kind of nice. I sort of don't know what to do with myself when we're not writing 10 or 15 offers on things.
For the same client.
Oh, yeah. No, I've written more offers this year than I have in probably my 20 years in real estate. But I can write those offers with my eyes closed now. So we are having a little bit of slowdown, but we're still looking good. It feels normal again, which is great. We're not going crazy high over asking. That being said, my latest listing, we had only 2 offers, but they were both $90,000 over asking. So
which is what Ray's been saying.
I don't know what that means, but just waiting on the appraisal.
Yeah, that's true. We have been talking about that a lot. I think I said 2-3 months ago in our market, you might get 20 offers, 17 offers, something crazy like that. But there'd only be 5 that were actual contenders, that were above list. Well, now you may only get 3 to 5 offers, but they're all the contenders. So those that are, at list price or below list price are asking for seller concessions. They've kind of stopped playing ball here. So it's not necessarily slower. We are seeing a little bit more days on market. In Northwest Arkansas, I listed a house there for a client that is here. We have an office up there, and it was really interesting. We listed on Father's Day weekend, really didn't get much activity, and then the whole next week, it like blew up with activity, and then went under contract. Well, a lot of the houses that listed after him in his neighborhood before Father's Day, it was like 3 seconds on the market, 30 seconds on the market. It was that kind of craziness. Then we listed his, went under contract, above list price, good price. Everybody's happy. Now, the other properties that were listed in that same neighborhood had lingered on the market a little while, but they also went on the market a little higher. So I think what Carly said was pretty insightful. It's very difficult right now to come up with the prices that, our clients are looking at us and saying, well, what should I price my house for? And then we start to do the research, and all of those closings that have happened over the last 9 months that have been totally crazy high, those are starting to have an impact on our comparative market analysis. And if we tell the clients now, like, yeah, you could totally list probably $20,000 over this and sell, maybe they could, but maybe now they can't, because if we're taking those into account, those lagging indicators of the past sales that have been crazy high and people making up for the appraisal gaps and things like that, if those are starting to close, then maybe it is starting to, it's not necessarily that home price gains have slowed. It's that we're getting better at being able to predict the purchase price of the average home based on previous sales, which was previously really difficult. I know, I think Elizabeth is in the room. We were talking about that yesterday as she was writing offers for her clients, trying to figure out what's a good offer based on where it's listed. All right. Well, thanks guys for the insight. Andy, William, I know you guys are here too. If you have any insight, feel free to flash your mic. Come on up. I'll bring you up there. William. All right, let's go. Andy.
Yeah.
Oh, sorry, William. I didn't see you. Go ahead, man.
Well, obviously I'm a lender, so we do a lot of tracking, bidding wars, the number one thing out there. Still abundant, but they've slowly cooled down. In April, we were at 74% of the offers were in bidding wars. May, we dropped down to 72%. And now the month of June, we dropped all the way down to 65%. So like you said in your intro, the inventory is coming back on the market, which is good for buyers that have been patiently waiting and getting their offers rejected. More inventory is coming up, and there's less of 20 offers on a home. You're still seeing it out here. I'm in the Chicago market, and it's still crazy as ever with the offers. I mean, I have clients, especially if they're FHA buyers, they're still getting looked right a pass because there's still 3 or 4 that are conventional, and maybe one of them are FHA or cash. So we are seeing that, which is good. You just tell people to keep, looking ahead and saying, hey, that's not the house for you. There's a house out there. We just need to find it. So back to you, Ray.
Thanks, man. That's good. That's insightful. 60% now in multiple offer situations in Chicago. Andy, what's your take, man?
I'd say it's probably the same as everybody else. You're seeing just a little bit less offers, not quite going as high. I think it's just like us. We're all fatigued and frustrated for our buyers in this type of market. But I would say that the prices seem to be leveling off just a little bit. And most of my sellers, unless it's in a certain pocket or a certain type of house, I'm mostly saying, let's go just under where we think the market is at and allow the market to drive up the price and have the appraisal gap coverage. That's generally how I'm looking at this and have been looking at it. And it's worked out well so far. The ones that are that are staying on the market longer, like you mentioned, they started off higher, probably too high. And, the market is speaking, we're not going to go that high for that area or for that house. So I think those are where the corrections need to be made.
Yeah, that's really interesting. Good takes, guys. Thank you. Thank you for adding to that discussion. And that's one of the things that I think makes our podcast different is that we're going to tell you what the news says, but how cool is it to have real estate professionals from around the country that are kind of echoing what some of these articles are saying? Like, yes, we are noticing this slight slowdown. We are noticing a more comfortable pace in the market, as Jen said. There's two things that can cause that, really. One is buyers totally backing off. Right. So buyers kind of pulling out of the market, getting frustrated, now going into rentals, forgetting that they want to buy a house. And if you recall, as Logan says from Housing Wire, he calls them the foreclosure bros. No, not what forbearance bros, foreclosure bros. Anyway, all the people that were predicting, like Susie Orman, Grant Cardone, they kind of doubled down on the prediction of a housing crash coming. They all said, forbearance crash bros. Thank you, Dan. They all said that it would happen because the forbearance and people would be delinquent and behind on their payments. And then the buyers would say, forget it, I'm not going to buy anything. So they would stop buying and they would all go into rentals. And as they went into rentals, the housing prices would begin to crash. And suddenly your home is worth half of what it was. That appears to not be the case. What appears to be the case is that there's actually more inventory coming on the market. And that kind of brings us to the next story.